All right, welcome back live this morning from Vegas. The retail pain continues. Nordstrom shares sinking after revenue and earnings missed Wall Street expectations with this most recent quarter. The company also cut its full-year outlook. This after Macy's reported its worst quarterly sales since the financial crisis. That was earlier this week. And today we're waiting on JCPenney, reporting before the opening bell this morning. The April retail sales report is out at 8:30 a.m. Eastern this morning. I want to bring in Kevin Kelly, Chief Investment Officer at Recon Capital Partners. Kevin, it is good to see you.
Thanks for having me.
What are you expecting? I mean, what is going on with retail? The consumer still not reacting to these to oil prices where they are.
Yeah, the consumer hasn't really rebounded and is spending their money more on kind of tangential things like Monster Energy. They've done well in this environment. But what's really happening in the retail sector is margins are coming under compression as well. So you haven't seen an uptick on the consumer spending as well as margins are starting to compress. And you've seen that throughout Macy's, JCPenney's. Last quarter, you're seeing it now, right now, with Nordstrom. So it's an interesting environment.
You know, I was really surprised during the break when you and I were talking about the expectations. Retail sales out in about 2 hours, and the estimate is up 0.8%. If we get an 0.8% number, does that tell a different story than what we're seeing from some of these retailers?
You know, I think it actually helps. It's hard to look at it on a month-to-month basis, right? You want to look over the last 3 months, last 6 months, last year, just to start to see a trend. And what we've seen is mixed data. We've seen mixed trends. So 0.8% will be great.
Yeah.
It'll help lend some credence that the consumer is probably starting to spend a little bit more, getting healthier, reaffirming the jobs numbers we've seen that wages are starting to increase. So it'll help solidify that story. Markets
are under pressure this morning. How important is this retail sales number for the stock market? And what do you think is going on in terms of, you're here at this hedge fund conference, SALT. What are you hearing from clients?
Yeah, we think it's actually pretty important, right? I mean, if you look at over the overall economy here in the U.S., it's roughly 70% services. Retail falls into that pretty significantly. So what we're hearing, though, is that people are really concerned on the fixed income side of the market. And one of the reasons why is that we're at all-time lows on yields. Companies are really levered. They're not bringing their cash back overseas. So those are some of the issues that people are facing, but also the liquidity side, right? So because of regulation, Dodd-Frank, tons of regulation like that, banks don't want to take on risk. And so that's going to impact pricing of securities, especially when people sell.
When you look at a company like Macy's, I mean, the stock obviously having a tough time over the last couple of months. Is this because there's not foot traffic, or are people shopping but they're going online? I mean, what role is the increase in online shopping playing in terms of this overall brick and mortar weakness that we're seeing in the retail segments?
I'm glad you brought that up because Macy's has a great management team, right? And it's a really well-run company. They're down about 50% over the last year, so it's been a very tough environment for them. And it's not all having to do with retail online sales, because you can see Macy's has a great omni-channel presence, right?
Right, they're online.
Yeah, they're online. They have great pricing online. They have a great omni-channel. So it doesn't necessarily have to do with that. It just has to do with such a competitive environment, and it has to do with people's taste, and they're changing and they're fleeting and they're going so fast that it's hard for big, large companies to react.
We got to talk about Google and Apple. Wow, Apple now hitting a 2-year low. Google, the most, Alphabet is the parent company, but hitting the most valuable company in the world in terms of market capitalization. That's pretty extraordinary.
Yeah, and that makes sense, right? Because let's think about Google. What does Google have? They have some of the 3 hottest sectors that you want to be in right now, right? They have streaming with YouTube, they're in the cloud, and they're killing it on mobile devices with their Android platform. They're doing very well. And even the CEO of Google said on the last earnings, he said mobile shopping has turned from moments, just quick shopping, to marathons. And so they're capturing that. Now, the margins are starting to increase, but they're not getting the benefit. It's not as good for them on mobile because they have better pricing on desktop, but they're the dominant player in that. And you look at Apple, Apple just really has one device. It makes up 65% of their revenues.
What a story. Remember when Google went public? They did that, you know, non-conventional auction when the stock was it $85?
Yeah, it was a Dutch auction.
$85. Yeah. I mean, we're talking about a company that's close to $500 billion in market value.
And we're talking about execution because look at what has happened to YouTube.
Yeah.
Yahoo. Yahoo could have dominated this space, right?
Yeah.
And they really gave it away. They were at the forefront, and they were the dominant player in search.
Yeah.
And here was an upstart Google that really took it over, and it lends credence to their business model and how they've done them with the management.
Sure did. Kevin, good to see you.
Thanks for having me.
Thank you so much. Kevin Kelly there.